generation farmer knows it as well as anybody. We have a chart that
Good morning, guys. Welcome to this Thursday, March 19th. And we got that PPI read yesterday. Even if it was weird on the calendar, we did get it, and a little bit harder than expected. The market has been reacted negatively. We also Fed number, and after that, so we were down kind of quite a bit. So it started off yesterday with a bias to the downside, and yeah, they did not make a big recovery in the overnight. So this whole sell-off here we got is all about the PPI and the Fed reaction to the Fed announcement. And right now we are down here in this support area, the 6630s. So we're right down there in this lower area. We'll see if they are going to try to take this lower or not. But so far, I mean, it's holding up fairly well given the circumstances. But we are down at an area where we potentially could see a pretty good move to the downside if they start taking out some of those key areas. So, so selling begets selling. So if they kick in and start getting a pylon effect, some algos start kicking in on the downside, yeah, they can run this quite a bit lower. So that is a big risk, and we'll just have to wait and see how this develops. So right now, though, news this morning, we get at 8:30 we get jobless claims, Philly Fed manufacturing, and at 10 we get new home sales and business inventories and wholesale inventories. So the new home sales, business, and wholesale inventories all coming out at 10. Again, a bunch of these delayed markers on it, so we'll see what actually comes out. But pay attention around 8:30 and 10. News is potentially coming out at that time. And we'll see what that is. A 10-year auction at 1. Okay, so that's what we got on tap today. Tomorrow it's just options expirations. Not much going on in terms of news tomorrow. So just options expirations going on then. Usually it's pretty choppy when that happens. So I will start this day off with a bias to the downside. Given the sell-off yesterday and the fact that the overnight hasn't really recovered a whole lot, I'm going to start off looking to sell strength for rotations down and see how far they're going to try to push this. we are down in this area, in a pretty critical area. This support area at the 6630s, and that comes out. We have a let's see if I do this. Don't have that's about 16 trading below this 6530, this low at for a good 6 months. So you take out 6630, 100 points down, hit the last support area, and then that comes out, bets are off. We are in a correction at that point. So we'll see. And it's the market is holding on surprisingly good. Given uncertainty in the world. I mean, we backed off from this high, this big rotation up here we had up to the 7,000 marker. We've been holding in this little area of value for a while. February now we have this little turmoil driving this lower, but it's not by any means falling apart. So we can definitely see a turnaround. Support could hold, and we could see them trade back up again. But unless something really good happens, so we get some good headlines come out and trade this on the short side of the market. So looking to sell strength against the 6670s, the 6680s, 6695 to 6700s. Yeah, so there's just 6695s, rotations down. If they can get up above the session high, in London session high could be a good starting point. If it starts trading above that, maybe start looking for a retracement trade back up to that 6715 area. But as you can tell, 6715. I mean, this guy right there, 6715. I think this is the first level that had to get up above before we can even have a shot at being positive on the long side of the market. So starting off with a bias to the downside, Looking to sell strength, going to buy support with a lot of caution. We are at the pretty good support area, so buying support could work out pretty good. But anytime you have a bias to the downside, there's no rush to get long against the rotation down. You're looking for a little base to form, and then leave it a certainty before you step in front of it. Unless you're doing a scalp, scalps can always work. But it just once you have a bias in a direction, you want to be a little less aggressive stepping in front of that. So looking to buy against the 45s, the 35s, down to the 25s with a bit of caution for rotations up. If any of them could potentially hold, and if they do, we can have a potential retracement, a little base forming, and a potential recovery there. But we'll see how that develops. But starting off on the short side to get started. If we see them start retracing this sell-off from yesterday, that would be a pretty good sign that the market is strong and resilient. And I'm not going to count on that yet. It's just the inflation fears is going to be an issue. PPI is coming up, and that's even before we had that oil shock. And in the next CPI PPI numbers, those definitely going to show up in the next few weeks, and that's going to be a drag on the market for sure. So that's kind of how we get started. We're going to sell strength against those areas: 66.70s, 66.85s, 66.95s for rotations down. If they start trading above 95s, definitely look for that retracement trade. Still looking for shorts all the way up here to that 67.15. So I'm looking for shorts against the 67.05, the 67. Well, that's maybe not as aggressively if they definitely hold as a reverse retest. And if that holds, definitely they could set up another rotation down. So we'll see where they're going to go. Sometimes you get a pretty good rally early on in a down day, and then they absolutely hammer it afterward. And that's kind of a pattern you'll see. The market is trading lower, usually it's strength in the morning, and usually after the first time when the market is strong, you usually get early weakness and you get strength in the afternoon. Right now, we'll see what we get. If the market is not very strong, we don't get much strength from the get-to, we just get the weakness. So right now, kind of looking for how the day session is going to open and what kind of dynamic we get here. We're starting from the short side on the ES, NASDAQ, same story. NASDAQ has taken out their support area here at the 650s. They're trading below that. They're heading down to these lower areas of support. So yeah, they took out the support area now with a few ticks right before we start talking. So probing below this, excuse me, 500 support area. So I would look to sell strength on the NASDAQ as well, up to this revert retest. So I'm looking to sell strength against the 560s, 600s, 640s. Or 640s, and then 700. If they start taking that out, they're looking for retracement trade past these the sell-offs from yesterday. And if they can get up above 700, you see we are up above this area on the F1. So and that's going to be a good sign if that happens. But looking for short setups against these areas right now to get started. So looking against the 560. 600s, 650s, 700 to 720s here for rotations down. And if they can clear that 700s, then we are in pretty good shape to retrace. I think get up about this area, up in this upper range. At least there's some traction to take this higher. But right now, I'm looking to sell straight. On the way downwards, the 400s, 360s, 320s. These three support areas on the lower end of this range going to correspond to this area right there. And if this big area comes out, bets are off. We're going to be heading lower at that point. We can probe this. The rotations down here has been days like when the market has been in pretty good selling mode, and that usually takes it a bit lower than you think. But if we take out this area in an organized fashion, that would be a sign that we may see a little bit of a correction start building. That would not be great, but that's kind of what we're looking at. So looking to buy weakness with a bit of caution. Initially against the 500s, then the 24 400s, 360s, down to that 320 level for rotations back up. And again, there's no rush to get long against those. If the market is going to be correcting and moving lower, just kind of try to trade it from the short side, and just be mindful that you don't sell or you don't sell into a support area. And that would be the one you want to avoid. All right, so that's the NASDAQ. Bond market, real quick. Bond market is back down in the 113s. They're backing off the high. So yeah, so the Powell's, the Fed announcement, and after the PPI took it lower. Fed announcement took it lower, and another leg lower. So they're backing off the highs there. And now we are back down in these lower ranges again. So we're down here looking for a retest of the 113.20s. And if they can take that out, look for a test of 113. That's going to be that lower edge. And as you can see, as we lose more and more history here on a 6-month chart, this little low volume area is getting less and less. We are down here against that 113. If that comes out, yeah, we may see a test of 11. And that would mean yields spiking up and up towards the high 4s, long-term yields. That would not be great. So a lot of impacts there from uncertainty. But that's kind of the fallout, when you have a little bit of uncertainty and inflation, especially now when you get energy inflation from the oil prices, it's going to be worth the effort. And it's like no one would ever do it. This is a unique time in history where they actually deal with that country, which is going to keep doing this over and over and over and has been doing it forever. So it's right now we're going to take that thing out and hopefully not have that on the table for a couple of decades forward. But that's kind of the bond market. So they're heading lower, but yields coming higher, and I would trade it from the short side to get started. Sell strength towards 1408s. If they trade above 1408s, I'm taking off that short bias and looking for maybe a retracement trade. And if they take out the 113.20, I'm staying on the short side at that point. I think the only buying opportunities I'm going to be looking for with some level of aggression would be the 13.20. And if that holds, would be a nice retest setup. So that would be if you look at this level right there. So that would be a decent. Oh, there you go. So that would be a retest failure of this move over here. And that would be definitely something to pay attention to. And that could hold. If that holds as a retest failure, yeah, we could trade right back up again. But right now, if they take it out, yeah, stay on the short side because they're going to drive it down here to the 113s, maybe even lower. So there you go. All right, so that's the bonds heading lower. ES and NASDAQ heading lower, risk off is feeling in the air for sure. And not a whole lot of news to drive the market. We have some coming out at 8:30 and then at 10, but none of that is going to be like market moving stuff in a big way. And I'm thinking it's all about the energy fallout and if they can get that straight open and that drop the oil prices. Oil prices comes down quickly, it'll be a good sign. But it's right now, I mean, yeah, that this also just follow along that situation in the Middle East and what's going on there, and pay attention to oil prices. Once they start coming down, they can sign confidence that they can get the flow going again. Things is going to turn around pretty quick. All right. So anyway, so that's where we are. Going to wrap it there for now. So good trading this Thursday, and I'll see you back at 11:30 for the next update. Good trading.